Mic check. Can you hear me?
Hello.
Good morning.
Good morning. Yes.
Good morning. Okay. Back to work. 2 p.m. has already been traded to. Good morning.
Good morning.
Morning. Nothing new, same old, just getting the basics done. 2 p.m. Friday has already been traded to. Overnight. Very interesting today. Along with simple question. Is this market likely to retrace towards the open of the day or expand outside the range? As we currently stand, we can see that it's still trading pretty close to the open of the day, close enough to the open of the day. So, on principle, it should mean two things. Since the start of the day, this is the highest high. So that would have been some run on buy side in here. Then we broke lower, make a new low. Then we retraced, and we pushed lower again. So both of these are representing stop runs. This has run buy side liquidity, this has run sell side liquidity. Usually, when buy side, sell side, retrace and expand is done, it automatically has me leaning towards bearishness. But this has printed last week, and I sold retracements and it made a new high. I'm not going to automatically dismiss my process because of a losing trade. So with this in mind, if this is retracing towards the open of the day here, then I'm expecting resistance ideas to print and show lower prices. If resistance fractals don't print in here, then I'm going to lean towards a breakaway gap printing at the high of the range and then higher prices since it has been consistently just pushing and making new highs, pushing and making new highs. As it stands right now, it's not very clear to me because again, this still looks like a retracement. So I'm looking to see them retrace towards 720 open and then die. But if nothing bearish prints when it retraces towards 720 open, then I will submit that this wants to make a new high. While we print here, calling the check. So pretty empty Monday. CPI Tuesday. Wednesday is empty. CPI Thursday. Retail sales. So instinctively, Tuesday and Thursday carrying a volatility event that heaviest would likely suggest some type of Tuesday, Thursday extreme. Tuesday high of the week, Thursday low of the week, pull back into Friday, Trump speaking 9 today. Is that today? Refresh. Okay. Is that 9 my time or 9? Or are we on the same time zone? Nine Central Time. I'm going to assume that 9 my time. Is it 7:42 a.m. Central Time now? Okay, cool. Forever debates. They will always happen. Time zone changes. Do we switch time zone? Futures versus CFD. Then yeah, those are the forever debates. Can't get around having those conversations. Nonetheless, I'm not going to mark anything inside here. For example, something that's like Thursday, 2 p.m. open, that's all the way down here. Simply because where we are right now, we haven't left this range. If we leave this range through the high, then that price level is irrelevant. If we leave this range through the low, then as a further draw in continuation, I'll put that on. For a little bit of higher time frame narrative, let me take a look at this screen with you. So expectation versus reality. The expectation starts with Bitcoin. So again, the initial analysis started with Bitcoin profits moving into gold and oil. Pullback, pushed above, expected a high of the week here, failed to put the high of the week here, and now we're way above that. So at this point in time, we're looking at what was the analysis that led to all of this. This candle being the order block, not invalidated. We're back there. So now you want to see what happens at that old key level to kind of dictate what is likely to happen for the rest of the week. Big push up on Bitcoin. Again, if Bitcoin moves before NASDAQ, it would assume that there's going to be a likely push up from NASDAQ as well. However, this on Bitcoin is not looking like a sustained rally. So if it's moving before NASDAQ, I'm going to assume again that NASDAQ is not going to make a new high, especially since there's no news today. So that means we're in an environment where the pair that moves first has already rallied and pulled back and is breaking down hard towards its objective. Not a big SMT fan, but I believe SMT could be useful in this environment, but not a big SMT fan. I'll just leave it as is. I'm going to focus on what does NASDAQ look like at the close of the day in relation to that level. I mean, Bitcoin. So with that in mind, this is trading lower. Expectation is this should trade lower. I am a little bit cautious since the high of this delivery is right there, less than 100 points away. We could see that. However, because volatility is leaning on a Tuesday high of the week, this is not sweeping liquidity. I'm open to the idea that the high of the week forms on Tuesday and not today. So today could be a tight range, choppy day. That makes sense. As it relates to gold and oil, anticipated run below here. Order block candidate formed here, August 6th. No CSD. Now we're seeing a couple things that looks like it wants to rally. It still means nothing unless you get the CSD. Anticipated liquidity run, liquidity was taken, there's no CSD, it's pulling higher, means nothing. It could be the high of like it could be a big wick again and then it turns bearish. CSD and then longs. Gold, same thing. If they're pushing money into oil and gold should be rallying. Gold already ran buy side, staying inside the range. Not exactly sure if this is one-sided at the moment, so I'll leave gold out. So oil rally, and Nasdaq chop is my expectation for today. So let's move back to here. $747. We have the highs and lows and no attempt to leave. So we've seen something like this before where clear high and lows in the market, anticipated them to stay between that high and low ahead of time. In particular, equity is open somewhere in here. So shopping around until then makes sense. However, this is a little bit different for many, many reasons. Number one, most instances when we have this run on buy side and run on sell side, 720 is below us and we're reaching into like retracement objectives inside the range. Just eyeballing, new delivery, retraced. This is the last internal liquidity that was taken. We're starting to displace, so it's not far-fetched to see or anticipate a low taken first, which would mean this low. So and let me frame what would I want to trade today. In this environment, if this stays bearish, first thing I want is either a rejection of that 720 open price or a bearish order block to print right there. That's the first thing I'm going to be expecting. Second thing I'm going to be expecting if we're bearish is shallow runs followed by explosive moves lower, which could start with a run lower. So a run lower, retrace, and then an explosive move lower. This is what an ideal day would look like for me. I would take great joy in shorting here and running that low and calling it a day. Since it's expected to be a chop day and Tuesday is expected to run buy side, I wouldn't want to see any majestic runs on a Monday if Tuesday is expected to take the high, because then from an emotional standpoint, if I get the short and I'm still looking for Monday to create a high, depending on what time that run on liquidity takes place, I'm going to try to look for a reversal. I don't want to do that, particularly because of how I journaled my week. I kind of went not tilt. I got too attached to a trade on Friday and then ended up causing a little bit of damage for myself. So I'm not trying to start my week with the mindset that I need a big trade or a big winner to recover. I just need to follow my process, stick to the rules, and if it takes me a couple of days to feel like I'm no longer emotional about it, and that's what it takes. But I'm not going in aiming for a swing and a miss type of setup. So yeah, usually when I'm expecting chop between here and equities open, I like to leave the chart and then come back at the equities open, and that's fine if anybody wants to do that. But because I'm looking for this to run here and I get that push, I'd like to see the new hour at 8 o'clock. Show me that. So at 8 o'clock, I'm looking for either this spike or this push. If this push happens before 8 o'clock, before equity is open, then it becomes a little bit risky because then the high would have already been, the push higher would have already been done. And then volatility could give it a little bit of a boost. So I'd rather us to be low down here when equity is open to facilitate that spike. Higgs, what's good? Looking like last week Wednesday. Yeah. The only difference with this is this fractal in here resembles a Tuesday, Wednesday reversal rather than a Tuesday, Thursday. So either way, the highest probability run on liquidity should be to take this low. The downside to this, based on an understanding of weekly profiles, is if this fractal is underlyingly bullish, it takes this low and then screams higher. If it's underlyingly bearish, then it takes this, retraces, and then lower. So whichever the situation is, bullish or bearish, this low is on the menu. I'm not trading for it in this case because it's not worth the risk. But if it was lower and I had a decent retracement to something that looks nice, that short would have been the trade to consider. All right, see, so getting that run before 8 o'clock again is ideal, in my humble opinion. So I would like, I'd like to see on the buy setup I'm looking for print here. It's 7:54, which means this is a 7:52 on 4 candle, which means we have 1 minute left. So if we're bearish on this fractal, it would mean on M1, when this wick is being created, there's a down candle in there somewhere. So that would have been, if it's 7:55 now, it was 7:53.
Right there, local man.
Right there. So I'd be an M1 CSD in here is going to have me buying. So it's 7:55. Where are you? 61. Oh, would have been nice if it was a 50-point run. But it is what it is. Maybe I won't take it if I don't get that pullback. I would like to ideally scalp a buy below the open price of this candle after it closes, and then start my day with a nice little trade. And then the new or volatility. Downside to this is the new or volatility could take this low again and then take me out. But that's a risk I take. But this didn't. There's no CSD. So taking this would be more of a risk than confirmation. 611, roughly about 10 points. I'm okay with a 10-point stop. If this goes below the open price of the open price of the candle again, I'm going to scalp this setup. perfect world, I don't want it to get back all the way up here. Eventually even make a high end and breakdown. But I'm still going to manage responsibly as it trades into maybe this high. What's going on? Something. The candles are not moving for a second. Do I settle for a not ideal entry? I don't want to. I don't want to. Okay. So
Not waiting for the close of the FUG from the displacement leg.
so now
At least.
I'm anticipating it. So that's what I'm saying. A 10-point stop is okay. It's not the worst thing that can happen. So I just don't want my entry to be below there. Fully aware that the new H1 is coming in and it could run, but that's a risk I take.
Hello, Kish.
Hey,
Morning.
good morning.
How are you as the family?
Still sleeping, but I'm here.
Oh, lovely. I hope you weren't so hard on yourself on Friday evening.
I wasn't hard on myself on Friday. On Sunday morning,
Yeah.
I was extremely critical because I think I got overconfident in the fact that I really expected lower prices, and I believe the high of the week was in. So I don't want to say I got greedy, but I sized in on that one. I could have just taken a regular loss rather than But anyway, how are you? How is your family?
Good. Thank you.
Nice.
Amazing. Just a quick question then. Would be, well, not a quick question, would be maybe a favor. Because I was watching the call, I think it was on Wednesday or maybe when you were, or maybe Thursday, the one whereby you were talking about where David had talked about the difference in profitability, and we're talking about okay, why sometimes you go with some setups and we are able to miss something. And I realized that at least from my own perspective is I come from the, hierarch to win rate, 1% size and stuff. And I was thinking, is it possible that maybe we do not, or someone like me, I do not understand how to really size or trade with points. So most times you mention, oh, this is just a 10 point. This shouldn't affect me. But I'm thinking in my mind, do I want to use 0.5% risk on that? Sometimes before you calculate that, the move is gone or something, or it's affecting. I don't know if you get where I'm coming.
I do.
Okay,
But
so
then here's my comment on that. Not to cut you short, but here's my comment on that. Assuming you are a day trader, whether you have a job as well or you're doing this full time, you cannot make all your decisions today. It means you have to come into each day with some amount of planning. That could mean tomorrow I know what level of risk I'm going to put on an ideal setup and what level of risk I'm going to put on a not ideal setup. I know what time frames I'm going to look at for my setups. I know what time I'm going to be in the market. Those things should, in my opinion, there should be things that you already know coming into the day, because then it lightens the work you have to do when you're actually at the charts. If you are coming into the charts, no idea how many points you're going to put on a stop, no idea when you're going to take a reduced stop. So like, I like when my stops are 20 points, because it gives them a little bit of breathing room, plus avoids the deep retracements and the wicks and all that madness. If I know that my stop is going to be 20 points, then I try to keep the risk managed so that if I'm wrong, you know, it doesn't affect me. But one of the downsides to looking at somebody that you like and watching them trade is you automatically expect, you know, all their setups to be beautiful winners, especially if you've seen them win a lot. So most persons will discard that part of trading, and when it works, everything is lovely. But on occasions, when it does fail, you know, we all take stops from time to time. On the occasions where it fails, it's usually at a time when you can't afford a loss. At least those are the conversations I've gotten. I was in a challenge. I was down on the challenge. I took the same loss as you. I'm down 5% or 4% on them. To me, I'm like, that's a lot of risk for one trade to take 4% on a challenge account. It's not like a personal account. That's a lot of risk. So some of the weight of trading has to be taken off your own shoulder by planning these things in advance, so you don't come to the charts and go all crazy. Not you, just saying for everyone.
That is
But
true.
what David was really pointing out to is the fact that I'm good at executing while others might hesitate. And I get that. But I try to show that I'm no better than you as it comes to execution. What really differentiates my execution from yours is you're maybe looking at a whole lot of moving parts, and probably justifying things after they play out. Like, look at this trade right now. I took this trade, or I was willing to take this trade the moment this candle opened, under the premise that if it CSD is this, it's going to be a beautiful trade. If I get an entry below here, it should be a beautiful trade. So to me, when I have outlined clearly what I want, it doesn't make sense for me to be like factoring a whole lot of other things afterwards. In real time, after I've entered, I can manage that trade with responsibility, but I don't go in and like
She
micro
descended before.
my execution. It
They
never
said-
ends
she tell
well.
me- Yeah, she told me they're breaking the brain.
It never ends well for me.
They broke it.
It never ends well for me when I'm like, for example, let's say I was looking at this as an order block, and I'm like, okay, CSD, I buy this, and then it runs up, then it comes back down. I'm not in a whole lot of internal dialogue trying to figure out what to do now. The only time I'm in internal dialogue about trades that are running in drawdown is when the loss is likely to be a big one. So you put it together. If I'm only going to be upset about a losing trade, if it's a big losing trade, then do all that I can to not make it a big losing trade. If it means cutting risk and wait for something else and scaling, do that. And that's what I like to do. I don't like sizing in aggressively at once. I like building into the position. So let's say confirmation comes, I enter. Secondary confirmation, I enter. Right? I scale on retracements and then let it run. We've all seen those instances where you have a very nice trading idea, you go in heavy a little bit too quickly, you get stopped out, The loss is too big, you can't enter again, the idea plays out. So if you have experienced that, then it's no longer a case of you don't know how to trade, but it's more of stop trying to do everything like at once. Scale in, risk properly, then leave the trade and stop trying to move it with your mind. Who got robbed? No, I'm fine. I'm fine. I entered at 627.37. My stop is at 616. Market came as low as, let me just check on my feed. Blah, blah, blah. Yeah, it didn't, no, unless unless futures feed has something else. Really? Did futures feed take that low?
No.
Somebody said they got slaughtered. So I'm trying to figure out how they got slaughtered.
No, I didn't take my low. Are you talking about my low or are you talking about like the contract futures?
No idea. I just saw that in the chat. Somebody says who got robbed, and somebody says I got slaughtered.
I'm still in too. I'm on futures.
Thank you, Kish. So if I can maybe ask a follow-up then. You know, well, you know me, and I'm extremely mechanical. I don't know. But sometimes that helps me, especially days whereby, you know, you take a nice, like you take several losses, but it gives you the confidence that, you know what, I'll do it the same way tomorrow and the day after. It helps you to deal with that. But then the problem is that um I also often wonder because sometimes when I'm maybe making optimizations here and there, I'm asking myself also, am I pattern trading? Of course, I have an understanding of what I do. I'm always excited when I watch a video of yours and you're explaining maybe the reason behind an idea that I'm trading mechanically. So it makes me feel like, oh, all right, now I understand why it works. But I at least before I just used it the way I saw it because it was repeating itself and again. So it's like I'm not. I cannot change because I've tried my best to be discussionary. It just doesn't. My brain just doesn't compute when I'm in real life. But then I'm also always wondering. It's like because it's tough sometimes, also, especially when you're having series of losses. It's like how then with someone that is mechanical, how then do I balance that trust? And I know you can say, oh, what your data is, but sometimes I want to harden, I want to size in, but then I'm thinking, am I risking too much? Am I breaking my rules? Sometimes I feel like it has to reach this specific level before I take TP, and then I'm watching all this amazing point that I'm sacrificing. So I don't know if you're getting what I'm trying to ask. Like, what is that balance between trusting your system versus trusting a pattern? Versus also maybe trusting, okay, this delivery Kish explained it, so I trust it.
Okay.
But,
So for me, there are some definitions that have to be clear when you decided that I'm going to put risk in a live market behind a trade or a trade idea. The system must have a clear, definable edge. Can't be a case that something like, let's say 720. I saw Kish trading 720 and every day 720 does this. Yeah, that's good. That's not a definable edge. The edge becomes definable when you have something that you can write out or close your eyes and explain to somebody without the use of a chart. So something clear cut would be at 720, if I can see where the highest high and the lowest low is before it, then I can stalk a setup at the high or the low after 720. It does not mean I have to sit and watch the charts. If 720 opens and it's 10 points away from the high, I will watch the chart because that's pretty close. But if 720 is 100 points away from the high, I'm going to set an alert When the alert comes, I'm going to open the chart. I'm going to look at the chart and look at what is printing there that gives me confidence. What entry fractal is printing here that I recognize. Okay. Sometimes the edge that we want is not the edge that we have. What that means is sometimes your system says it's clearer. All right, that looks like a stop. Your system says it's clearer on like a higher time frame, but you don't have the luxury of staying in the charts until the next hour plays out. So you try to trade the delivery of the hourly candle. There's nothing wrong with that, but you try to do it and you get a stop. At some point, you have to move your thought process into thinking that if I want to capitalize on this edge, then I have to start using or incorporating the hourly chart a little bit more. So it's not always the case that because you're mechanical, you don't see how to scale your setup or make it better. Sometimes it's just that the information that you have is leaning on something else, but we don't see it, which is why it's important to play around with time frames. Did this really just sweep me out and then pull back? Anyway, it's important to play around time frames to get a better understanding of where it's clear, or build an indicator. Build an indicator that shows you what the high and the low is before a particular time. And then if there's a specific window in which you look for a higher low to get created, build an indicator that points to that. Then it's easier to analyze how many times do I see the high or the low get print inside that box at those levels. Wow. See, this is why I like 20 points on a stop, because while I'm not affected by the loss, my data has shown that I have less wins. Even though the 20 point stop is bigger, I have less losers that are actually a full 20 points. Sean says, you bought that one, Sean?
Not yet. I'm just waiting for it to come back.
I'm sad. I am sad. I got taken out right at the low. By spreads. Market didn't even get there. Spreads took me out. Hope? No idea. But meh. Exit is open coming up. I have half a mind to trade the open, especially since now we have the new hour sweeping the previous hourly low. I feel a tad bit more confident that this is going to run and potentially get to that level. It's run by side. But as you can see, I got wicked out. I'd really like to get another trade below there, but if it's gone, it's gone. Instinctively, I want to size into the next trade, but I won't. I won't. There was a high around before the central. After that was broken to upside. The down candle was missing. But it's 808 central candle. Is that so? Is that so? Pull off the low. I wonder if he's referring to here. But then that wouldn't be valid since this is down candle passing through. I understand the logic you're saying. Who said it? RA, but I don't see it. Maybe it's future speed. Need to work on continuation trade. Always struggle. So I'm not. Okay. Okay. Honest question. Assuming you took the loss with me, or assuming you had one of those widened stops because your data also says 20-point stops is ideal. What do you feel about this loss? If you lost this trade, how do you feel about it?
I lost it, but I got back in it.
True.
So that low was officially taken.
So I think this is where RA is referring to. But then it wouldn't really need a down candle since we had back and forth price action. There's no FEGs there in this feed. Let's see. Lost nothing. Oh, yeah. To be honest, yeah. So this is why I'm saying that. I'm not saying that to be when you do your pre-market purpose, the high and low between 2 p.m. and 7:20 a.m. that you mark out. If not, what's the time when you? So I want to know where the open price of 2 p.m. is, and I want to know if we traded to that level before or after the day open. So the day closed somewhere in here. We can see that we traded down here on Sunday. So check. Then I want to see what's the high and low of the day. This is Friday, I believe. Or it's not Friday, is it? Yeah, no, it's not higher anyway. So I want to know what's the highest high and the lowest low before 7:20 of the day. And I'm looking for 7:20 to trade outside that range or towards the open of the day. This instance, I think the open of the day is a little bit above us, which is why at the start of the call, I'm saying I want to see resistance ideas there. So again, because this is not like the first high that we traded and created, and that high was created after a high was run, so it didn't open, trade up, make a high, and then just lower prices after that. Open, trade up, made a high, ran that high, and then we traded lower. So the stop run is at this high. So if we have a liquidity pool, it gets taken, close above that, breakaway gap. So this high is going to do what this low is doing. If we close above here, retrace on longs. Similarly, we mentioned that this would be the ideal trade fractal for me. It starts with taking that low, and then it runs. How far this run goes is subjective. The perfect world, it would hit, reject here, die. When it's not so picture perfect, it trades up here and then done. In other instances, it could trade to like 6 a.m. open, but that is something else. So on M4, my trade looks a little bit premature on M4. I don't mind because I knew when this was printing what the M1 should look like. And I felt like that was a decent, Well, maybe it wasn't. Maybe on futures feed it wasn't taken. I felt that was enough confirmation to go long. I still don't doubt or not like the idea of going long. There's nothing wrong with my long here besides the fact that my stop was too tight. In my opinion, I wasn't early. Nothing. The only thing about that I don't like, and I didn't like it initially, was that my stop was less than 20 points. But I was okay with both the size of the stop and the placement of it. So this now is, what's that word? What do you call that word? I don't remember. It's not retribution. There's a word I can't remember right now, but you know what it is. When you, it's not recover. I don't know. I'm lapsing. My brain is lapsing. I don't think their target for the long is too conservative. All-time highs again. What I'm saying, I don't know what the word is, but you know when you do something and it fails and then you try again, then it's beautiful. That word. I don't remember what it means. Low risk buy. I don't like to look at ES because ES carries this heartbreaking price action where 8 times out of 10, when I want NASDAQ to behave and be beautiful, ES does exactly what I want. But the ranges on ES are, not deserving of my time. Redemption, Sean. There, that's the word. Redemption. Is this my redemption? Is this my redemption? New M4 coming in. Speed. The speediest speed. Let me play devil's advocate and say I don't want to see this low being taken by order of the Peaky Blinders. And if it does, then I might cut the trade. But I want to put my stop exactly there. More of a mind marker. I would not want to see that candle low get taken. But if it is open spiking, do whatever. But I would still not want to see that candle low get taken. Okay, that's not the low of the candle anymore. I'm not going to move though. I'm not going, despite them wicking below it, I'm not going to move that. Maybe it's an M1 candle low. Yeah. For all intents and purposes, I'm using the low of this M1 candle. So now I want to see them close back above the closing price of this candle. If it was a down candle, it would have been open price, but this is a green candle. I'll explain this afterwards. Close after, close above. This makes this trade really beautiful in my eyes. If it doesn't, then it's not as beautiful as I would have liked. So close back above here. No stalling, no waiting, just close back above there. There we go. Now, no retracement. Equities open is volatile. Yes, I know. But I don't want any retracement at all back below that line. So I'll adjust this to close above, stay above.
Combien un dépôt?
That's what I said. Yeah.
Mhm.
What? No. So now this is not looking as nice as I would have liked. Again, I would not want to see them coming back below here. If this wasn't so close, I would have considered trading my stop, but I think it's too close to do anything about it. And like 2 points away from my stop. All right, so that stopped me out. So starting my day with 2 losses. I'm not I'm not burning. I'm not burning. Just watching to see if I'm wrong. We haven't closed or expanded below the level. So I'm like just watching. I mean, despite it being manageable losses, I don't want to rack up losses. I don't see anything here that invalidates the idea. I don't see any expansion through the level. I don't see any FEGs through the level. I don't see any gaps through the level. I don't see any breakaway gaps. I don't see anything that says the idea itself. See, I don't see anything that says the idea is wrong. It's just one of those things when it's a little bit more wicked than you would have liked. Nothing I can do about that. Only thing I can do now is look to see if it gets as high as I'd like, and then I'll play the short. Yeah, it's probably because I'm not going to blame the markets for my losses, but I expected August to be a little bit difficult. So far it has been quite difficult, but yeah. Let's see. I'm not going to reclaim a level to try to get in. I'm just going to watch. Much as I'd really like to get that long in, once bitten, twice shy. Would you consider H4 bag as a level? Nope. doing the same thing. See, just once, twice, 3 times. Haven't left the range, haven't controlled the desire to be right here, and then just relax. Because despite wanting to sell, I don't think we got as high up as I would have liked to sell from. So it is what it is. And I'm not going to buy this again if it's just wicking and pulling back, pulling and pulling back, pulling and pulling back. All right, here's 832. And we all know on instinct, if it's 832, I like buying the low of that candle. So let's see if the next candle opens, wicks this low. And let me get my phone. Because if this candle trades below here, I'm going to buy first and put my stop in afterwards. Very risky. Very dangerous. But acceptable. For me. Dancing around, dancing around, dancing around. Almost control the risk if you are going to be doing this too. I'm not ready to tell you to go and take another loss because for the sake of being right, I'm following my rules here. So I'm long here. Not overthinking it, putting my stop in, trusting my system. If this becomes 3 losing trades, then I stop. But I plan to, if we get a close above this candle's closing price, I want to scale in. So no overthinking, follow the rules. This should be difficult mentally at this point, particularly because I expect a high percentage of the persons either watching or in this trade to be watching the P&L, not the candles themselves. I don't have a fix for that. It's perfectly normal. Risk mitigation is a sensible part of trading. If you're watching the P&L and you're just thinking about making it all back and all that, I have no comments. I get it, but I don't trade like that. I am not managing this until this high is swept, and the only thing I'm going to be doing is trading my stop. You, on the other hand, again, I'm not going to tell you that if you took a 10-point stop and you get 2x whatever you lost. I'm not going to tell you to not manage your trade there. But yeah, I'm going to be holding. That's the plan. Not going to be holding forever, but I'm going to be paying myself here, making sure I get paid. So if it's tough, you have a choice. Do you want pain of discipline or the pain of regret? Or do you want 1-hour trades every time?
Still pain.
It's a tough game. I don't have a response for everything. I don't have the best suggestions every time, but I can tell you that I took the loss twice. I understand the importance of making the loss back, especially if you're doing like a prop challenge or something like that. But I also understand the discipline that it takes to convert my process into gains, tangible gains, and not just one-off wins. So depending on where your mindset is at, if you need to stop the bleeding, you stop the bleeding. If you're strong enough to relax, then relax. Still not time to manage in my book. First place you should consider managing if you are, again, focused on stopping the bleeding. This is the first place you consider it. Management for you is either going to be trimming, closing full to recover your losses, or just moving your stop. That's it. Zoom out so you get a big picture. Oh, ouch. Here comes volatility.
I just closed. That was half my salary, please.
Sorry. I like the human side of trading, Thank you for being open enough though.
Yeah. And I
Share
was
that.
lucky enough to not take the losses before, so I was one and done.
Even better.
Yep.
So I expect nobody to not be protected. If you're, a little bit on the ballsy side and you haven't taken anything off, at least your risk should be off. If you took the losses, then you should have recovered. Well, even if it's one contract, that's
Yeah.
covering both of the
Mhm.
losses. And if you're fortunate enough to have a runner, then let us see. I'd want to close this somewhere around, I don't know, 852, if possible. 852 or maybe, like a run on these highs in here. Let me use M4, get a better. Pre this spike. Before this spike, The highs would be, I want to use this one, but this looks like a truer representation. So at the very least, I'd want to close more here. You have to trim here, you know, that it just makes sense. You have to do something here in terms of management. I'd like to see what happens here. So either 852 in the next 10 minutes or this high, and I take more off the table. Bam, 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 bam. Bam, 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 bam. Do, 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 do. Okay. You go through the 832 logic again. Wait a second. I'm on the brink of managing my trades. So afterwards I can be of service. Close enough. Bam. I am managing my trades as I said I would. It's on you to
Just took 2 contracts off. Yeah,
There
one
we go.
contract still.
There we go. There we go. There we go. Green for the day.
Yes, sir.
There we go. There we go.
What's that color?
You're comical. I took my first partials here. I just went break even here as I said I would. First partials here, and okay. Am I going to? This is going to be beautiful. Is it going to be beautiful?
All the way up.
You know what's funny? And I notice this happens a lot. Like my partials are at the low of this candle. Like, why do they not like me? Like, why couldn't it expand and then slip me up here? Kidding, never mind. Moving on. All right. It's like 40 points. I feel like this is enough, to be honest. I'm gonna close, start my week good. No runners, no nothing. And then we can have a brief conversation and then we can go wrap up for the day. So the question I got was to explain 832 logic a little bit more. I don't remember if it was last year or the year before. I shared one methodical approach to trading every single day. It's hinged on the idea of circuit breakers, which just fancy terms. I'll explain what's important. You don't need to be an encyclopedia. After every volatility event, 2 minutes passes before the dust settles. So the first reference point is going to be the high or the low 2 minutes after volatility drivers. Equities open is a volatility driver. 2 minutes after equities open is 832. So if we pay attention to the high and the low of the 832 candle, I'm going to say, I want to say 8 times, but for the sake of giving you realistic expectations, I'm going to say 7 times out of 10, when you have a bullish bias, you can buy the low of the 832 candle, or buy a CSD that happens after the 832 candle is run. 100% methodical. Methodical. And vice versa. If you're bearish, the high of the 832 candle. So there was a day last week when I had a buy at 832 as well. I think it's one of those days where the market crashed right after, where it gapped before I could get a sell entry. Well, I could have gotten a sell entry, but I chose to be disciplined on the call. There we go. So same thing here. It happens a lot where you expect equities open to behave, and instead of behaving, it becomes spiky. That makes sense. So you open at equities open, I believe here. We're expecting it to pump higher, but it drops instead. So it's almost as if you miss an entry here or get stopped out here, you're gonna get an entry at 832. Don't take my word for it. Do your own due diligence to see it. But for all intents and purposes, my day is done. Let me send you a screenshot. You saw my losses, so you should have no problems seeing my wins. There we go. Smokey J. All right. Moan,
Yep.
good?
Yep. Green.
Cool. All right, guys. So yeah, the bulk of the analysis in terms of the sell-off has not played out yet, but because we're on a path to mitigate the losses from Friday, assuming you also took losses on Friday, I want to make sure that we focus on stopping the bleeding, getting back whatever we lost on Friday before we start swinging for the fence. So with that being said, I'm going to end my day here. I'm going to ask you to protect what you got, and same time, same place tomorrow.
Thank you, Kish. Thank you.
All right. Don't enjoy the rest of your day.
Ish.
This is Scotty. Not surprised, Scotty. Not surprised at all. See you in the chat. Feel free to post. Feel free to-
Respect, big man.
Lots of love.
Thanks, boss.
Cool.